Let's go to Jonathan, Northern Ireland. Jonathan, you're after what kind of mortgage you should choose, is that right?
Yeah, that's correct, Dermot, yes. What it is, our fixed rate is due to come to an end of 5 years. With the predicted rates expected to come down, would you advise going for another 2-year fixed or another 5-year fixed, or take the risk?
OK, so you've got options with a fixed rate or a tracker rate is what I'm hearing there. And for those of you who don't know, a tracker rate it tracks the Bank of England base rate. So Alison mentioned the Bank of England kept the rate at 5.25 yesterday, and that would track it. So if that went down, those of you on a tracker rate would go down with it, but there is a risk that it could go up. With a fixed rate, it gives you certainty. So it depends what your appetite for risk is. 2-year, 5-year depends on how long you want to stay in your current property, for example. The 5-year fixed rates are cheaper at the moment than 2 years, but that can change in an instant. We see it change all the time. And the fixed rates are better than the trackers at the moment. So that may indicate, if you were analysing that, that may indicate that the Bank of England rate might start to come down in the future. It's really personal. I'd be very happy to help you navigate it, but it really depends on lots of factors. So not a straightforward answer there.
But how much is, that base rate's never going to come down to what it was, certainly not for a long time, to what we all got used to, the cheap money, right?
Yeah.
So in your experience or your expertise, how long do you think is it going to be bobbing around 5.25 late fours for a while?
We don't ever know, and things like inflation completely changes it. So we actually hoped it was going to come down this time, and then the inflation news hit and we all was, I think that's going to keep it where it is. It's all about stability. They've got to create stability in the market, and the Bank of England base rate does that. It gives a good indication. But what it's important to know is fixed rates aren't necessarily just based on that. They're based on something called swap rates, and they are coming down. We've seen them come down since the 31st of January quite dramatically. So it's not all about the Bank of England base rate unless you're on a tracker.
Yeah. Sometimes, I suppose, with a fixed rate, it's nice to know where you stand for the next few years, isn't it? How much you got to pay, and it's just going to be that.
Yeah.
What are you saying, Jonathan? Going to roll that dice?
Yeah, that's perfect. I like the satisfaction of knowing what I'm going to be doing every year, rather than just it's fluctuating on and off.
Yeah, absolutely. Well, good luck, Jonathan.
Good luck, Jonathan.
Thank you, guys. All the best.